Thank you both for being here this morning. We're really excited to have Synergi Partners with a presentation this morning on some of those disaster relief funds and different ways that they can incentivize cash flow right now through this pandemic and virus that has really changed all facets of our economy. We have Elaine here who's going to kick it off. And just a little housekeeping, if you are watching on Zoom, feel free to utilize that chat area for any questions that you might have. If you're viewing on Facebook, feel free to pop a comment in there. I will be helping Elaine and CJ with any questions at the end. So if you have a question midway through the presentation, we can maybe answer it then, but if not, for sure at the end of the presentation, we will get to it. And with that, Elaine, you have the floor.
Thank you, Caroline. My name is Elaine Reynolds, and I am the National Sales Manager for Synergi Partners. And we're excited about this webinar today as it's going to bring some great value to your business. We'll be talking about COVID legislation and opportunities that you have with it, along with disaster incentives that Horry County will have available to them as well due to Hurricane Florence. CJ, our sales leader here at Synergi Partner, is going to be going through the slides. And if you have questions, of course, we'll answer during the presentation if we can. If not, we'll be opening it up for questions at the end. CJ, if you would like to take it away.
Thank you, Elaine. Guys, good morning. My name is C.A.R.E.S, and just like Elaine said, I'm with Synergi Partners as well. We're located in Florence, South Carolina. So we hold Myrtle Beach area dear to our heart. That's where we all go on vacation and spend our weekends during the summer and during beautiful sunny days. So we're praying and hoping that we get through this crisis soon and we get to see each other again. Thank you for attending this morning. Just like Elaine mentioned, we'll be discussing the COVID-19 legislation and not only what it is that they're available for you guys through the PPP, but actually what other options you have, and we'll be discussing why is it that we want to talk about those. And as well, at the end, we'll be discussing, just like Elaine mentioned, the great option that Horry County business owners have because of Hurricane Florence. Even though it happened a year and a half ago, you guys have a great option to help your bottom line now. So just to get it started, a little bit of background on Synergi Partners. We are the largest privately owned company in the United States handling tax credits of this kind. We are actually have over 200 of years experience in our executive team when it comes to tax incentives, and we've been doing it and working together since the 90s, and one of our first experience handling this type of credits and tax credit was back in 2005 with Hurricane Katrina, when for the first time ever, the employee retention credit, which we'll be discussing today, was actually passed into law. Just to give you a couple of facts, whenever we get the chance to review tax credits done by either a company of its own or by a third party, we have found some great averages of increase. Just like you can see in this slide, usually for the work opportunity tax credit, we see an average of 43% more credits. And in disaster credits, our average is over 250%. So tells you a little bit about our difference with Synergi Partners. Our experience since 2005 has allowed us to interpret legislations and work closely with agencies in Congress and within Congress that allows us to look at circumstances of a business that maybe you might not look at or third parties might not look at, and allows us to understand a business in different industries. How is it they're affected by a disaster, and how is it that these legislations help them maximize their credit? So just really quick, why are we talking about tax credit? What is a tax credit? Some of you might know what is a federal tax credit, and most of you might not. So that's why we want to just touch quickly, what is it? There's two types of credit. You have a credit that can be applied against your tax liability. So very simple. If you have a tax bill, a federal tax bill for 2019 or 2018, some of these credits can be applied against that bill. It reduces your tax bill and you get to keep that cash in the bank. Some of the credits are refundable, like the one we'll be discussing today for COVID-19, would actually allow you to get cash back. And so the amount of the credit, portions of it can be returned to you as cash. You do not have to wait to file your taxes, or you now need to wait for the next year to get it in a form of a credit. These credits exist for different initiatives, some for investing, some for growing the workforce, some for retaining the workforce. And in fact, the two credits we'll be discussing today are because of retaining the workforce, with a slight change because of COVID-19. And the great thing about these credits is that there's no requirements of have to use the credit or the cash equivalent in the future. You are able to reinvest it in your company. You are able to put it back into your books or your savings, and use it in whichever way you find it best for you and your company. So today we'll be talking about the COVID-19 legislations, and there are two parts of this legislation. The first one we'll discuss is the Family First Coronavirus Response Act, or because of initials known as FFCRA. And the second one is the C.A.R.E.S Act. You probably are familiar with the FFCRA. It was well advertised through the media and through Congress. In the C.A.R.E.S Act, the one that you probably know, and it's the one that you were expecting to use, was the PPP. The SBA loans, which yesterday we know that a new legislation passed that will fund more of these. But we'll talk about the pros and cons between all of these credits, and hopefully we can educate you on which one might be the best option for you. So the very first one, the FFCRA, this is the extension of a 6-leave credit or a family leave credit. And it is a 100% refundable payroll tax credit that goes against your FICA taxes. Right now, this credit covers for companies that have less than 500 employees. And it's a great credit for those companies who might have employees that were affected directly by COVID-19. Either the employee themselves have to take leave because they're sick, or the employees themselves had to take leave because they are taking care of somebody in their family and they're being assigned as a caregiver, somebody who's suffering from COVID-19. There are nuances to these credits. There are differences that people did not know before when this was approved. It is that you are also able to include those people that, because of FMLA, they are not able to work taking care of family members in their homes, not only for being sick. So it could be even those they're taking care of kids in their homes because they're out of school, and because of that they cannot work, and they have been qualified for the sick leave or the family leave. And if it is part of the FFCRA, you're able to receive 100% of those wages back in a form of a refundable tax. So what does this mean? Well, when you are able to calculate the wages that you'll be able to claim to receive your credit, your tax credit, you accumulate your credits for all these employees. Then you'll determine your tax liability, your FICA taxes, your payroll tax for the quarter, for the period of time that you want to take advantage of the credit. And let's say that you have a tax liability, a payroll tax bill of $5,000, and your credit, your tax credit has been determined to be approximately $10,000, then you can use your credit towards your taxes, and then the difference, the other remaining $5,000 in this example, you would get it back as a refundable cash, and you'll get it within a few weeks after you file in. The great advantage of this, just like I mentioned before, is that you are able to use that refundable tax in any way, shape, or form that you find it best for your business. You can reinvest it, use it to pay future payroll, or to just stay afloat, like I know that many of you are looking to do. one thing with this credit is that it's for companies below 500 employees, okay? And there is a specific form that you have to use, the 7200, whenever you are ready to take advantage of this credit. Now, the C.A.R.E.S Act is different from the FFCRA, and there's a few differences with this. It's divided in two things. First is the PPP, and then it is the employee retention credit, which we'll discuss in more details. Now, just like you know, the first round of PPPs, of SBA loans, unfortunately ran out of money really fast. But not only that, we also found out during the first round that thousands and thousands of businesses didn't qualify for the loan or did not get approved. And yes, there is now funds being coming your way and coming towards this program again, the SBA loans, and that's exciting. However, unfortunately, there are still thousands of businesses that, regardless there's more funds, they might not qualify for the loan. So what we want to do today is talk about the employee retention credit, which is another great option for those businesses looking for an alternative. And this was also passed during the legislation that passed on March 27. So this is already into place, and it already came with the original package. So what is the employee retention credit? Why is it that we want to talk about this? The employee retention credit, just like I mentioned at the beginning of the presentation, was created back in 2005 because of Hurricane Katrina. The Gulf was also hit by Hurricane Rita and by the storms Rita and Wilma. And it is created originally to help regions maintain a low unemployment rate or a flat unemployment rate after a disaster. And since then, every time there's a major disaster, this legislation has to be approved, the employee retention credit. The latest one that was very big that you will be familiar with is Hurricane Harvey in Houston, Irma in Florida, and Maria in Puerto Rico. After that, then we had Hurricane Florence in the Carolina, which we'll be discussing in a few slides, and then the huge Category 5 hurricane in the Panhandle, Hurricane Michaels. When COVID-19 legislation was being worked on, Congress decided to include the employee retention credit because it's a great way to immediately impact businesses in all communities. And this is a great credit because it's very generous. It is up to $5,000, which it's 50% of up to $10,000 of wages per employee that a company can get back as a refundable tax credit. So just like the FFCRA, if a company finds to be eligible, and we made the calculation that this company has a tax liability, again, let's use a different example. They have a tax liability of $6,000. They payroll taxes for a specific period of time. And that's what they will report to the 941 form. But they have a tax credit of $10,000 or a tax credit, let's say, of $15,000. Then they would deduct, they can use portion of the tax credit to reduce the $6,000 payroll liability that they have. And the remaining, in this example, would be $9,000, gets refunded to them within a few weeks as cash. And again, they're able to use this in any way, shape, or form they find to reinvest it back in the company, pay payroll, and there's no requirements of how long they have to use it. There's no requirements of how they can use the money. So, which businesses are eligible for the employee retention credit? As of it stands right now, one eligibility, it is they have to not taken the PPP loan, the PPP option. So if you are somebody who did take the SBA loans and you receive your funds and you're going to use your funds or you already use your funds, you are not eligible yet to the employee retention credit. Of course, we're monitoring changes in this part of the legislation, and we hope that if anything changes in the future, you'll be able to use it. If it does, we'll make sure to let you know. But as of right now, if you use the SBA loan, you cannot use it. All the eligibilities are just two simple ones. The first one, you were fully or partially suspended operations during any calendar quarter in 2020 due to orders from a appropriate governmental authority. So what this means is that just like South Carolina, if in any given moment the state, a county, a city, or any type of government limit your operations, and this is including even working from home, meaning that even though you were still working and you were still operating, but now you had to do it from home, then that makes you eligible immediately. So right now, until anything is lifted from South Carolina, and from the moment that our governor gave the stay-at-home order or mandate, then you qualify, or you experience at least 50% reductions on your gross receipts during that specific quarter compared to the quarter from the same quarter from last year. So either one of them you had, it makes you eligible to pursue the employee retention credit. So a quick example of a business partially suspended, it's just like I mentioned before, the state governor issued an executive order. You are now limited in the operations you can do. A restaurant had to be just carry out or just delivery, or any other business had to limit how many clients they could take care of. Or like I mentioned before, your revenue declined more than 50% compared to the same revenue last year. And the great thing about this is that you are able to keep collecting the credit until your operations in a quarter, your gross receipts in a quarter go back to over 80% compared to the same quarter from the year before, from 2019. There are two things that determine what wages qualify that you can claim on this employee retention credit. So the first one is companies with less than 100 employees, and these are full-time employees. So we're going to use only full-time employees to determine if you have over or under 100 employees, and at this moment not count your part-time employees. If you have less than 100 full-time employees, and this is 30 hours or more a week, then you're able to claim all the wages during the period of time of eligibility. This is between March 13 through December 31st. And as long as within that time, you either are under a government mandate, as we discussed a couple slides before, or your gross income, your gross revenue, has not exceeded 80%, then you keep claiming your wages. And if you're below 100 full-time employees, you get to claim all of the wages, including people that are working or people that are not working. And this is where expertise comes. We have actually able to determine that you're able to use PTO if you pay it out. You are able to use, if you furlough employees and you're still paying their insurance premiums, you're able to use that, portions of those. So regardless if you're sitting right now and thinking, okay, I don't have all my employees working, I'm not paying all of my wages. I did allow some of my employees to use their PTO and exhaust that before they had to file unemployment. I did have some wages between March 13 until now, and I just had to close my doors temporarily. Then you are able to claim those wages throughout. And as your employees come back to work, we're able to determine the period of time that you can claim. So you might be able to claim even future employees as they come on board. If you have more than 100 employees, 100 full-time employees, then the qualification of wages that you can use changes slightly. And at this point, you're only able to claim those wages for employees that are not providing services or are not productive or are not working. There's different ways to interpret this section. So this will specifically be first for those employees that you pay wages, but they couldn't come to work or they were not able to provide the same services to you that they usually do. furlough employees, and again, PTO employees. The less than 100 can also claim their employees are working 100%. The over 100 cannot, but we have been able to, due to our experience, also determine, and we have ways to calculate what is considered production or services in an employee. And you might be able to claim portion of employee that has limited productivity. So for example, if you might have employees working from home, and in a given regular week, if they were in the office, they were producing this much of services or products, and now working from home, they have reduced that production because they have to take care of course, their kids, and they're just not as productive because of the limitations they have. Then we are able to actually put a wage value to that lack of productivity, and you might be able to claim some of that wages as well. So even if you do have a larger company with over 100 full-time employees, you still qualify for an amount, and it can be very generous if you consider it that right now you're able to claim wages all the way back to March 13. So just so you understand a little bit of your options, right? If you have less than 100 employees, you qualify for the employee retention credit and you're able to claim all the wages. You qualify for the PPP. Now, if you use the PPP, you're not able to use the employee retention credit. That's why the or. And then you are able to use the leave and sick time credits. You can actually do both. If you decide to use the FFCRA, you can still use the employee retention credit. Between 100 and 500 employees, you do have some wage restriction, but the three options still apply. And if you have over 500 employees, you already probably most likely know that you can only do the employee retention credit. You do not qualify for the PPP or the FFCRA credit. Now, this is going to be very important in Horry County. We have a lot of restaurants, a lot of hotels that fall under the NAICS code 72. That starts with 72. When it comes to the PPP, determining if you have less than 500 or over 500 employees, you're able to use it by location. On the employee retention credit for all industries, you're able to determine your full-time employees by FEIN. So if you have different entities with their own federal ID number, tax ID number, you're able to count your full-time employees by entity and not by the full amount of the company. So right now you're sitting there and saying, okay, I was convinced that I wanted to do the PPP, but I did not know the option of the credit yet. And now I'm more confused than I was before because they both have their pros and cons. And or I really do not have even the option to use the loan. We have created a tool that is free for anybody watching right now, anybody who belongs to the Myrtle Beach Area Chamber of Commerce or anybody in Horry County. So you feel free to share this with as many people as you want to. You can go to our site, the link is here, and you're able, there is a tool that we have created, the estimator, in which you're able to put some details about your companies. It takes you about 5 minutes to determine these characteristics of your company, and allows you to compare options closer to your actual real numbers of which one might be better for you, either the loan and what the loan might be forgivable, because remember, the loan does have some requirements to be forgiven, and most likely, in most cases, it's only forgiven in a portion of it. The rest will still stay as a debt, and then it will compare to the credit, and it will give you an estimate of how much credit you could expect each quarter. And then you'll be able to determine, okay, do I want to take the loan? That might be a better option for my business, or do I want to go ahead and take the credit? That might be a better option. When it comes to claiming the credits, one of the advantages of the credit is that you are able to claim this as often as you want to. You do not have to wait for the end of the quarter. You do not have to wait for the 941 form. A new form was created by the IRS, form it is 7200. And you are able to claim them in advance, to do it every time you do payroll, monthly or quarterly. And this would allow you to start receiving the credit earlier than you have to submit your 941s. And then at the end of the quarter, it gets consolidated When you work with a company like us, with Synergi, of course, we make sure that you are in compliance with these forms, that you're in compliance with this reporting, so you do not put yourself at risk of overclaiming or actually also a risk of underclaiming what you deserve. The last portion that I would like to touch, it is the natural disaster credits. And why do we want to talk about this in Horry County? Not everybody in the nation, COVID-19, everybody qualifies in the nation, which is great. But not everybody in the nation qualifies for this disaster credit. So it gives those businesses in your area an advantage, a way to find even more relief that you were not expecting. Just like we talked before, the disaster relief credit was originally created in 2005 because of Katrina, Rita, and Wilma. And every time there's been a major disaster in the nation, that's when this credit is introduced as a legislation again, and it gets approved and gets through as a law. And we were affected in South Carolina in 2018 because of Hurricane Florence. And it brought a lot of destruction to our area. It brought a lot of floodings into our area. And, I can remember the videos and pictures of Conway being flooded for days, as well as other areas in Horry County. And what this credit does, it's not the $5,000 that you can get with COVID-19, but it's still very generous. It is up to $2,400 as a federal tax credit for those employees you retain after the storms. So it is location-based. Only some counties are actually allowed to claim this credit. So in this map, as you can see, only 8 counties in South Carolina, the ones in red, are the ones that are able to claim it. So those in Georgetown and Horry County are very close to your area, qualify. And what it does is very simple. You were operating before the storm, and on the way for the storm coming to us in their path, we had to prepare, we had to evacuate, we had to bore windows. So business is starting to be affected already on the storm before the storm got here. Then we get hit by the storm, and then it takes days, weeks, and sometimes months to recover from the effects of the storm, because it's not only what is obvious. It's not only that I had damage to my roof or damage to my windows, but sales went down. Tourism went down. It took a while for tourists to come back to the area. Maybe there were road closures and routes were changed, so your deliveries had to change, your distribution had to change, your vendors were not able to deliver supplies. So there's different circumstances for all industries. And in these slides, you can see a few examples of cases that we have actually worked on for Hurricane Florence specifically, and in South Carolina, a resort, a fast food restaurant, and casual dining. And all the cases are different. Every case is unique. Every company is unique. And as you can see, you can have, depending on the size of employees, you can have a credit in the millions or something in the 6 figures, even with just 60 employees, and with a QSR example. So usually where wages are, a little bit in the low end and in the entry level, you're still able to get a sizable credit. The good thing about this credit is that right now you can actually, if you have the option to amend your 2018 taxes and get a portion of this credit back as cash if you had a tax bill that you paid, or you can use it for 2019 and reduce your tax liability. I think you all know that COVID-19 is a great legislation, but it doesn't touch your 2019 tax bill. Even though there was an extension to submit your taxes, when you have to submit them, if there is a liability for 2019, you're still going to have the tax bill. And this credit can help you that way. So you can take advantage of the current legislation for COVID-19 for your current costs and your current payroll liability. And then you can take advantage of the 2018 disaster relief for Hurricane Florence, and you are able to use both. It's not considered double dipping. So you're able to include both. As you can see, these are other examples of credits, and you can see the average credit per employee varies tremendously depending on the company and the industry. So you can see as low as $600 per employee, as of $2,000 per employee, with the maximum being $2,400. What Synergi Partners have been able to establish is the nuances of the employee retention credit. What is considered inoperability? One thing we hear a lot, and you're probably sitting there right now thinking, I do not qualify for this credit. My business, my restaurant, my hotel, whatever you have in Orange County was not affected by Hurricane Florence directly. But we know with our experiences that there were ways that you were affected indirectly. Your finances were affected. Again, your operations were affected because of road disruption. Employees couldn't come to work. Schools were closed, so employees had to stay home with their kids as well. So there's different nuances that will help you qualify and will at least allow you to get some form of a credit. We do all the work with Synergi Partners when it's a very high level process, from just engaging with you, the business owner, all the way up to audit assistant in case of an audit in the future, defending it, providing a very detailed operational impact analysis report that details your claim and how it's that you did. So you will be, we'll carry you through the whole process and make it seamless for you to make sure that you can peacefully claim these credits. So I've said a lot. I'm going to now hand it over to Elaine, back to Elaine, and then we'll open up for questions. Elaine, go ahead, take it away.
Thanks, CJ. Today we have on the line Patty Felkowski. She is with Britain Resorts, and we partnered with them on the disaster credit. So she has agreed to come on the line and talk about their experience with us, and also their experience with taking advantage of the disaster credit. So Patty, are you on?
Yes, ma'am.
Hello.
Hey, how are you?
Very good. Thank you for joining.
Well, you're welcome. Well, I will say we actually were looking into this before the tax credits were finally approved. And so we had done a little bit of the preliminary work, but once the state or the Senate and House finally got themselves together and actually approved the credits that we could use it, we moved fairly quickly in the process and were able to get it done before we filed our taxes for 2019, which is a great advantage, being able to do that for the owners. Huge credits on all of our properties for the period during Florence. Obviously, with hotels and restaurants, we were severely impacted during both the storm and really more by the flooding after the storm that prevented people from being able to get here. The messaging that was out there telling people to stay away because the roads were so bad and so on. So it worked out very well for us. And I will say that I've got a package here, probably about an inch thick, maybe inch and a half, of the documentation that goes with it. Because the credits were so large, we were actually a little bit concerned. So we had our CPA firms that do the tax returns for the different businesses, which included one of the big four, as well as a local firm, get on the phone and spoke with the Synergi's attorneys, just kind of questioning some of the methodology and everything. And at the end of that, they were all very comfortable. The comment was made to me that this was probably the best tax credit package that they'd ever seen put together, that the documentation was really exceptional, and that, you know, the only concern was just because of the size of it and the length of time that we were taking it, that there was some just wanting to make sure that we were on the right page as far as what was allowed within the credit. Again, after the conversation with the attorneys and all of the accountants on the line, everybody was very comfortable with moving forward and just very pleased with the work that was done.
Awesome. We always like to have hear that type of feedback, and every client we deal with, no matter the size of small and large, are treated the same and get the same type of methodology and credit packet.
Oh, and of course, ours has multiple businesses. So I have one package, but it's actually, several businesses in that package.
Absolutely. Well, thank you for that, Patty. I appreciate it. I'm not sure if anyone has any questions directly for Patty. CJ, do you or Caroline?
I don't have a question, but I just want to piggyback on what Patty says. Patty, this credit is probably the most underutilized credit out there.
Mm-hmm.
And just like you guys were just at the beginning, right? Like before the legislation passed, maybe he's having some doubts. We have businesses all the time having doubts about this credit, and millions of dollars are left on the table by small businesses, and it can be very impactful. Yes, you guys are a large business, but for a small company, mom and pops, a $10,000 credit, it makes a big difference, especially in these types of times, in this crisis. So thank you, Patty, for sharing that with us. We really appreciate you and appreciate working with you guys as well. Caroline, we want to open it up right up for questions from anybody watching.
Yep, I am right now checking our Facebook page. So if anybody does have a question on Facebook, feel free to put that right in the comment box below the video. And same on Zoom. If you have a question, please utilize that question and answer. Actually, excuse me, it's chat on Zoom, and we can get those questions answered.
If there's no questions, this was one we had on our previous webinar, which was a great question. It was about nonprofits. If you are a nonprofit, they had limitations with the PPP. You do not have it with the ERC. You're able to take advantage of the employee retention credit, which is great. The employee retention credit has never been available for nonprofits before, but the COVID-19 legislation allows nonprofits to participate.
I am not seeing anything available right now on our Facebook page nor our Zoom chat. So if there's anything else that y'all want to add, questions that people you think might have, I can also, if you do have questions for Elaine or CJ, I can always direct you to them through after the presentation.
Absolutely. I'm glad you brought that up, Caroline. I will be the point of contact for Synergi, for anyone viewing the webinar or in the Myrtle Beach area. You can reach out to me by email, or my cell phone is on this presentation. They can reach out anytime, and I'll be happy to answer any questions they have.
Awesome. That is perfect. So is there anything else that y'all want to add at this time?
Not in my end. Elaine or Patty, anything else?
No, I think we covered everything. I would just like to reiterate, this is an awesome opportunity. I do think a lot of companies are looking at COVID-19 legislation, but I do think that the disaster relief is one of those credits that is not as well known. Generally, when I have conversations, businesses really don't know about it, but it is an awesome opportunity, especially at this time, to get some money back into your business by allowing you not to have that tax bill this year, or even amending 18 and getting a refund back. So it's a great opportunity, and we'd love to have just a conversation and talk with you about how your business was impacted, and then in turn, hopefully get some cash back into your business. So I
will make a comment that I was surprised at the amount of the tax credit. It was much higher than I expected it to be.
Yes.
Absolutely. And as CJ was saying earlier, we have a lot of conversations with businesses, and they say, well, I wasn't closed, and I was only closed a day, and we were right back in business. But here's the thing. Impact isn't just about being open. Impact is about, whether your vendors were impacted and you weren't able to get deliveries. It's about whether your employees are impacted and whether they're able to get to work. There's little things that I think you don't really think about as far as impact, that once you really do start having a conversation about it, that yes, I was impacted, rather whether it was directly or indirectly. So that's a good point to make.
Yes. And on the amount of the wages too, especially with COVID-19 right now, the fact you can claim from March 13 and on. So if you haven't taken advantage of the PPP, so you can apply for the employee retention credit, that is a lot of wages for a company. It's a month worth of wages right now that it adds up. It really does. And you'll be surprised of what kind of credit you can get now that is refundable because of COVID-19. So thank you, Patty and Elaine, for saying that. So Caroline, I don't have anything else to add. Like Elaine said, we are available for anybody who has a question in the future. We are excited for our relationship with the Myrtle Beach Area Chamber of Commerce. So we hope to see you guys on virtual networking events that I know you guys are planning, or real ones in the future when we can all come together.
Yes, well, of course, Elaine and CJ, thank you so much for giving your expertise on the specific matter. And as you mentioned, we do have a lot of upcoming webinars. We are hosting a B2B Connects, I believe it is tomorrow at 10:30 a.m. That's going to be here on the Zoom platform. So if you are interested in attending, that'd be a great opportunity. But thank you again so much, and we will see you all at our next webinar.
Absolutely. Thank you.
Bye.